Hello, and welcome to this edition of the Inside Scoop. I am Sam Beveridge, Customer Risk Manager with Ardent Mills Solutions. The market is busy absorbing information provided by the U.S. Department of Agriculture's March WASDE report. The numbers were very interesting, so let's take a look and see what all this commotion is about. USDA revealed soybean production in Argentina as the largest market driver. Last month, the USDA had Argentine soybean production at 54 million metric tons, and they came back today with a 47 million metric ton estimate. This reduction of 7 million metric tons was a result of hot, dry weather in the key growing areas of the country. Will this number continue to decrease as weather persists? In the meantime, we see an increase in Brazilian production of 1 million metric tons, and the USDA raised the export of Brazil 1.5 million metric tons to make them the world's top supplier. The U.S. soybean exports are currently losing out based on this increased competition of supply and values based in the U.S. dollar. The March report also revealed U.S. corn supply will be smaller than expected due to the export demand and rising ethanol production. The USDA pegged corn ending stocks at 2.13 billion bushels, down 220 million bushels from last month, and below the low end of the market forecasts given in a Reuters poll. Now, couple these numbers with a 3.5 million metric ton reduction in Argentine corn, and we start to lose any cushion the market had in the carryout formula, and pressure increases on the U.S. export quantities moving forward. Last, but certainly not least, we need to touch on wheat. Wheat is the true bread and butter of what we do here at Ardent Mills. Here's the deal. The USDA boosted its outlook for wheat ending stocks. In the export market, the U.S. supplies were priced too high to compete, and the U.S. wheat ending stocks were seen at just north of 1 billion bushels, virtually unchanged from February. The U.S. wheat export was lowered 25 million bushels today to a forecast of 925 million. In the world, production increased again. Exports out of Russia continue to grow, and we saw reduced demand from India. So what does all this mean? The focus of the markets will remain on weather and supply. First, South American weather, specifically in Argentina. Will their crops continue to get smaller or stabilize at this point? Second, U.S. weather will start to spark interest as we establish expectations on the U.S. planted acreage estimates for corn, soybeans, and spring wheat that come out in the later March reports. Planting windows and acreage profitability will drive production and swing acreage estimates. As with most years, we are entering a time of volatility and uncertainty in these markets. With what we know today, corn and soybean markets are showing reduction in supply, which can result in higher prices. Wheat, while healthy on the balance sheet, could see some sympathy from the row crop markets. As you can see, we have a lot to keep our eyes on and remain nimble. In our next report, we will be able to have a better look at the U.S. crop estimates and be another month closer to the U.S. hard wheat and soft wheat harvests. If you have any questions or would like to understand more about these markets we are dealing with today, please give me a call or send me an email. Signing off, this is Sam Beveridge with Ardent Mills Solutions. Have a wonderful day, and I'll see you next month.